Welcome everyone to HFN, where we trade different, and also we are your trusted source of news according to the price chart. Today is the first day of the year of 2020. We're going to update you all on what one analyst is saying to expect in the early half of 2020 of at least a 15% drop in the value of stocks in the stock market. This was an article written from CNBC, Stephanie Landsman, and we always will look at some of the points that they listed in their article to see if it correlates with the price chart. And if it doesn't, then we know that that article is not accurate. If it is, then we know that the article is accurate. Thank you all for watching our video today. If you guys see that this content is very simple to see and understand, hit that subscribe button, like and share the video, and join us on our other social media platforms, i.e. Twitter, Facebook, Instagram, and then on our website at HueFinancial.com if you're interested in getting the understanding of language analysis. So now let's talk about this article. Now we got an analyst. He is one of a money manager named Jack Ablin. He's telling investors to brace for stocks to drop at least 15%. Now, when I saw this article, I definitely wanted to see what Jack Ablin stated for 2019. And this was the article back in February 20, 2019, to where Jack stated that this was a sloppy market and pullbacks should be embraced. He stated that most of the 2019 rally has already occurred. You guys can tell right here on this price chart, back in 2019 February, he was speaking literally to the drop that came into the market on December. Okay, to where many of the analysts was looking for the stock market to hit a bear correction. So he's trying to state that the recent movement to the upside from that correction has already occurred. So he really wasn't looking for 2019 to be as positive as it once was to end out 2019. This is what he says, and I quote, "We started the year expecting roughly a 9 or so % return for 2019. We've gotten most of it already, thanks to a pretty dour outlook among investors going into the new year." So if we were to create a price range from 2019, the beginning half of 2019, where we started January 2019, which is right here, to conclude December of 2019, you guys can tell that it was a return of about 23.25%. He stated 9%. That's all that they were expecting. So the recent market movement in the stock market has exceedingly unsurmountably surpassed his expectations. If he didn't adjust his original analysis as we went throughout 2019, he missed out on a fantastic opportunity to see great gains in the market. 23.25% versus his roughly 9 or so %. They already expected that in the beginning half. So I don't know if he really participated in the great movement in 2019 for the United States stock market. Okay. So he doesn't think that there was anything fundamentally wrong with the United States market or the economy. He was just basing his portion of his analysis on a relationship between the financials and the S&P 500. So from his standpoint, if the financials are looking terrible, then the market should follow suit. And right now, when this article came out in February 2019, the financials were underperforming. That would suggest to him that equities could struggle over the next 6 months. And as you guys can tell, that did not happen. The fact is that the financial markets and liquidity in general is really the lifeblood of the equity market. And when the Fed opened up their wallets to continually feed the banking sector, the market saw higher prices. And I also found noteworthy is that the firm that he works for had at that particular time $3.5 billion AUM, assets under management. Now, if you come to the article that was posted on the 27th of December, this company has $6.7 billion in assets under management. So they have increased the amount of money that they are managing in their particular company, which is Crescent Capital. Now, again, he's telling investors to be watchful for a price drop of about 15% in early 2020. Now, the expectation, the time frame, would you state that that would be one quarter, the first 3 months of 2020, the first 6 months, first 9 months? What would you expect early 2020 to mean? He continues to state that valuations are stretched, meaning that the value of the stocks is not noteworthy of what the earnings are getting on a quarterly basis. We had a 30% move this year on 3% earnings growth. His newest sell-off call came after the tech-savvy NASDAQ crossed 9,000 point level for the first time ever, and SP 500 rallied to a record high. And another thing that I found interesting is right here. He suggests that the driver for the market setback is unclear. He doesn't know what is going to cause the 15% drop in stock price. I can't see a specific catalyst unless it's higher interest rates that would participate a decline. He doesn't know what's going to cause the drop, but he's telling you and me that we should brace for stocks to drop at least 15%. Clueless. Despite his market warning, Jack isn't completely abandoning his bullish views. See, this is more confusion. What stance is this gentleman taking? Is he looking for a 15% correction, or is he looking for the bullishness to continue? Despite his market warning, he isn't completely abandoning his bullish views. He plans to use the next pullback as a reset that'll help him capitalize on future returns. So in early 2020, it's safe to say that Jack is looking for a pullback, a market movement to the downside, to which he's going to capitalize on, meaning he's going to buy up more of these stocks to continue his bullishness that he has for the long term, because he holds equities for about 7 years as a minimum. So this pullback is going to be his entry point. So this is his plan. He is telling you his overall outlook of what he's expecting for 2020 and beyond. 2020 is probably a payback. We go back to fair value. The valuation of these stocks is too high. So he's trying to state that 2020, we're going to come right back to something of realistic, something more realistic. Best case for 2020, mid-single digits, as the market tends to follow earnings without much valuation expansion. So he's not really expecting to see those 23% gains that the Dow received in 2019. Might get mid-single digits. That's what he's expecting. So now, as always, for us, we value the price chart as our news generator. It tells us precisely what's going to happen into the market. So we got what he is suspecting. And now when you look at the price chart for the Dow, it still looks strong. I wanted to talk to you about our last video that we did in the Dow, which was on November the 15th, 2019. Go back and check out the playlist. We have a Dow playlist. The video is there, and you can see our expectations on that particular day was for the market to see higher prices, and it has played out precisely that way. We played it on the weekly time frame. 1.52%. But if you're still into the market today, about 2.25. Simple to see, simple to understand, right? So now let's go ahead and get rid of that. And the question that many people are talking about is, what is going to happen in the market for the Dow and the stock market? I'm going to get rid of this line here because it is not active. And then I'm going to extend out this overall trend into the market for the Dow. So this is how the market overall is trending. Now you can tell that we truly have broken away from that trend of higher prices. So can we see, according to Jack, a 15% drop in price? So let's go ahead and see what that would be if we were to take it where we are at now. So that would mean that Jack is looking for the market to pull back all the way down to here, around 24,400 points. Okay, maybe a clean even 25,000 is what this gentleman is looking for the market to move to in the Dow. 15%. And the catalyst that I would state would be if China and the United States does not implement their phase 1 deal, or it hits a snag to where it prolongs the agreement between both countries, that could instill a movement to the downside, alongside with the Fed stopping injecting money into the financial system. Those two things I would state would be the catalyst to push the value of these stocks to the downside. So here we are looking at the market in the Dow, and conclusion of the month of December, the market still looks strong. We started out the month in the Dow moving to the downside. We closed towards the high. Now I still suspect that the market is weak, but not severely weak, not to where we should be able to see like a 15% drop in price. But like I stated in our NASDAQ and our S&P 500 video yesterday, the volume is definitely of concern regarding how high this particular market can continue to go. Okay, so definitely I'm keeping my eyes open on the volume over the next couple of weeks, because if we continue to see dwindling volume, it tells me that that energy to continue to push these stocks higher is not there. Okay, so you can see right here that we ended on the last 4-hour bar in the Dow with a movement to the upside in price. I'm still suspecting that this stock, this index, is still weak. All right, now you can tell that we are following another ascension line in this space, which simply means that the Dow can continue its upward momentum to higher prices. But this is it right here. This particular 4-hour bar broke this minor ascension line higher. That's why we are still vying for the market in the Dow, the S&P 500, and the NASDAQ to continue to see those lower prices. So for this particular video, we are going to play the Dow movement to the downside in price, just like we did in the S&P and the NASDAQ yesterday. Okay, so this is our expectation right now into the Dow. We would TP the market once again at 28,400 points, under the presumption that we get more of that strength to come into the market. But we're playing this solely because of the volume that has been coming through on the weekly time frame and the monthly time frame. There is clearly no activity coming into the market for the last 2 weeks. Okay, so that's why we're playing the Dow, the S&P 500, and the NASDAQ to the downside. Now real quick, speaking on the S&P 500 and the NASDAQ, we played that market yesterday in our video on the 4-hour chart, and you guys can tell it has already surpassed our ultimate support area. But again, I'm just going to extend that up higher, okay, because I'm not expecting the market in the S&P 500 to really see movement higher. Okay, so the only thing that I'm adjusting in the S&P 500 is I'm extending the ultimate resistance area in our forecast higher. Okay, so that's what we're going to do there. Then I'm gonna do the same thing in the NASDAQ. So let's go ahead and change that one real quick too. So let's go ahead and extend this up a little bit higher too. So there, we updated the resistance area in the NASDAQ and the S&P 500, but for all three indexes, we're looking for the market to see lower prices. The Dow, the NASDAQ, and the S&P 500 all are being played on the 4-hour time frame, okay? So now let's see how the market plays out in this upcoming work week and its beginning half of 2020. Questions, comments, as always, let us know. Make sure you always maintain your profitability, and I will see you on the next one.